Hello, Smart Money Tree Podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and today I'm joined with Doug Hagren. Hey, Doug.
Hey Kirk, how you doing?
Doing great. Doing
Good.
great. It
I hear
is.
you're going on vacation soon. I just got back from, people that listen know that I was in Alaska, and then I got back, and then I went on a scout trip, and I head somewhere tomorrow. It's the beginning of summer is just absolutely crazy time. You'd think it would get easier. It's easier for the kids. It's a nightmare for the parents.
Yeah. Yeah. Summer is. School's great because they have daycare.
Yeah, pretty much.
Summer is great quality time all day, every day.
Now I will say my daughter turned 16 and got her driver's license, which is incredibly helpful and scary as heck at the same time.
I'm in the same boat, man. I'm really scared for when my kids start driving. I took them to the mall yesterday, and I let them drive around the mall, huge mall parking lot. The first thing in the morning, no one's around, and my oldest wanted to see how fast he could go. So
You
yeah,
said he. That's the issue. My daughter's
no,
like,
no, my youngest is a rule follower. He's like
okay.
he was not. That's not his style. My oldest, he's the adventurer, and he's the one I worry about. So
Got it.
we're gonna have some rules.
Well, people said, I said, here's the thing. I'm not worried about my daughter. She's a good driver. She had a goal to get 100 hours with her permit before. She listened. She's conservative. Now I went from the best, a driver that she thought was the best driver she ever knew into someone she critiques all the time now, because now she watches and nitpicks everything I do. I'm scared to death about everybody else. I mean,
You're preparing for marriage, Doug.
pretty much. I'm scared to death about everybody else. I know my daughter's going to be great.
Yep. Well, that's the thing. You got to make sure that your kids are the ones in charge and in control. And my dad had this rule growing up. Is like, you're never going in the car with another teenage driver. It's like, you can drive. He's like, if you're gonna wrap your car around a telephone pole, that's your fault. But don't let some other kid do it for you. So, I was like, okay, that's a fair one, I think, for the most part. If you're gonna go do something bad, at least do it yourself. Don't let some other kid do it for you. But we taught him to stay away from the kids with the lead foot, which I guess were quite a few of them in this class. So
Rule number one for my kid going into driving is understand that every other person on the road is an idiot. And
yes.
If you know that,
Yep.
It will make you more conservative and scared, and it'll make you caution every intersection, every car you're around, and always keep that at the front of mind, and just feel no matter who you're around, they're going to make you just expect. There's an old saying in the stock market, Kirk. I don't know if you've heard this one, but and it might have been from Benjamin Graham. No, actually, it's not. It's from what is?
Just tell me the quote, and I'll tell you who it's from, Doug.
Basically, it's a rough quote. If the instant you put your money in, expect to lose money.
I never heard that one before.
No, the reason is the mentality, right? The mentality is if you can get over the fact that markets go down and you can expect that, then you'll be okay, and then you'll think long-term planning. And it's I will come back. It'll come back.
Come back.
I'm looking at my books right now, because if I say the name, everybody's gonna.
It's okay. We'll come back to it, Doug.
We'll come back to it.
Filler time.
Oh.
Yeah, no, I tell my kid the same thing every time we're driving. I point out, just like, assume everybody in the road is not paying attention.
Yes.
Don't trust anyone with a car at all.
Yep.
And whether you're walking on the street or whether you're driving a car, don't trust anybody. There was a time when we were growing up where the chances of that happening were like 1% of 1% of the time. Now it's like 70% of the time, because everyone's staring at their phone while they're driving. And so terrible practice, but that's what's going on. So people aren't paying attention anyway, on top of the fact that they're just bad drivers. And there's tons of bad drivers out there to begin with. I mean, I can't tell you, the other day I was driving down the street. Some guy was sitting there at a crossroads waiting, like just sitting there. There's no one coming the other way. I'm just driving. As I get close, he darts out in front of me as if he didn't see me and he wasn't sitting there for like a minute beforehand. Then he darts out. I almost hit the guy, and I was tempted just to hit him because he's being such an idiot. But it's like, come on, like, why are you being so dumb? But that
PC joke. Same thing happened to me with one of the short bus school buses in our district. The short bus was sitting there, and then all of a sudden, I'm coming up to the intersection, nothing, boom, pulls out right in front of me. I've seen people running four-way stops without even looking anymore. And a tragedy in Columbus, Ohio, where I'm from, a former Buckeye player and now local Buckeye media just killed someone in a vehicular homicide, 2 a.m. about a week ago blew a .29, I think, something like that, 100 miles an hour through a local suburb. I mean, anyway, be careful out there.
We'll get some more positive. Yeah, we're going into the holiday weekend. Don't drink and drive, or I mean, honestly, I don't even drink anymore. I don't see the point. And you know what's interesting is it makes these alcohol companies no longer resilient because the whole next generation, they don't even drink.
Mm-hmm.
Like I stopped drinking. I don't see the point. It's fine when you're younger and you want to go out and meet people and socialize, but like I have no interest in doing that anymore. And I've got young kids I hear about, my friends' kids that are grown, like they don't drink. So I don't know. Maybe that's a trend to keep an eye on. I wouldn't put it past people to start drinking again in bad times. What was the old? What was it? Rodney Dangerfield picked a terrible time to stop drinking.
Yeah. Oh no, it was Lloyd Bridges.
Yeah, Lloyd Bridges. Yeah, that's right.
Yep.
From Airplane.
Yeah,
so I don't know. That's an interesting trend. I've started to notice it doesn't seem to be impacting much because people will still drink and they'll just keep raising prices because people like to drink just like smoking. People.
They've stopped drinking. That's because they're now doing cannabis. Now they're doing cannabis.
Now they're vaping. Yeah, I mean, the cannabis. I don't think that's changed all that much, and you can't really. Actually, we'll get into the trend. We'll get into that returns later. But if you look at, I'll share that. But cannabis is doing horrible for stocks.
Not a good stock.
It's been doing horrible for a long period of time. I know everyone wants to invest in it because they see the opportunity. I haven't seen that play out in stocks yet. My guess, I think we talked about it about 6 months ago on the show, is that my guess with cannabis stocks is basically that the existing tobacco companies will just start doing cannabis. Mm-hmm. I mean, you in order for you to make money in cannabis, it's a natural thing you can grow on your own. It's gonna be really hard for people to do that in mass and start a cannabis company. It's just there's no barriers to entry. It's like trying to be a farmer of corn. Oh, no one else will do that. So yeah. I think farmers have no margins. It's just bad business overall. I think in general it just seems to be, especially with the public stocks. So I don't think it's an area that has a lot of upside. I know people are excited about it, but I don't see a lot of upside to it. It's kind of like investing in space. I think it's great if you're investing in the private side, but the public side, it's not so much there. Space is one I find interesting. I'm very curious to see what happens with the public, if we get many, if any, public space stocks. I know there's an ETF that invests in space, but I'm not sure. I don't really follow it. I'm not sure it's really there's a lot of opportunity there. So I think one of the things that I wanted to, we're not going to talk about AI too much today, but we want to talk about some of the themes we've been sharing the last few weeks, is the theme towards trends and sectors. And if you look at all these new trends, these new sectors, everyone wants to invest. People have been asking me to invest in AI for like the last 2 years. Oh, it's great. You want to be in AI. Okay. Where are you going to invest? I don't know. There aren't a lot of companies out there. There's some small companies, but I'm not a big fan of the small micro cap companies. I think there's just too much to lose. And you can't really invest in the big companies because they're diluted. Microsoft and OpenAI, Google with Gemini, and Anthropic, which is not owned by anybody, although there's rumors surfacing in the last week that Apple's in talks with them. Honestly, I think that's probably the best thing Apple can do, because Apple, pretty much since Steve Jobs died, Apple has done no innovation. Zero.
Nope.
I think Tim Cook's done a great job at managing the company, but he's done a really crappy job at innovation. Other than burning money in the Titan project and a few other things they've tried to do, I think they're just constantly behind. And honestly, if they don't get an innovator in there, it's going to probably go the way of the first iteration with Steve Jobs, where the company almost went bankrupt and they brought him back in. I forget who was running it during that time, but it was some guy from like IBM or something. Oh, Coca-Cola. Yeah, they brought in like the ex-president of Coca-Cola or something to run it, and he almost ran it to the ground. So I think they need some more innovation there, or if they want to keep their status, because I just don't see I just don't see them innovating at all. So I think probably the best thing to keep in mind is you really can't invest in quote unquote AI in the traditional sense. Nvidia's got a really high PE. You could argue whether it's a good stock or not. I'm not going to, because that's not, I don't want to talk about individual stocks here today. But I just think it's interesting that there's a whole new trend that you really can't invest in all that much. Crypto, you can invest. There's plenty of opportunities to invest in crypto. Both Bitcoin and Ethereum are ETFs. And then there's some other companies you can invest in, as well as on the private side, it's easier, different coins. But I think the AI trend, which is going to be tremendous, we've talked about in the last few weeks, invest in yourself. Best thing you do is invest in yourself, become irreplaceable at work, understand it, understand how to prompt. We'll probably talk about this over the next few weeks, maybe some of the things to do, but understand how to prompt, understand how to apply it, understand how to think differently. Because that's one of the best things you could do as an employee, is make yourself irreplaceable, because other people who are not bought into this will be replaced and you won't. And just think of it this way, if you know how all the stuff's built and they don't, they can't replace you, right? Because you know everything. So it's a great opportunity. It's probably a once in a lifetime opportunity to build in a knowledge base that puts you way ahead of everybody else. Much different than the internet. The internet was a lot different. This is in your head. This is about how to think about AI, how to construct it, how to make yourself irreplaceable. So,
is inflation getting you down? Do you feel like your money is worth less every time you open your wallet? Is shrinkflation frustrating you at the grocery store? Well, I have an answer for you. We're giving away free money. That's right, I said it, free money. I feel like I'm not doing my part to create inflation. Why does the government get to have all the fun? What could be better at increasing inflation than giving away free money? No, I'm not an employee of the Federal Reserve. And no, I'm not an employee of the US government either. And no, I am definitely not printing it myself. But it's free. What more could you ask? Well, you might ask, is it real? Well, yes, it's totally real. I'm holding it in my hands right here, see? Oh, wait, this is a podcast. You can't see it. Either way, I'm holding in my hands right now, and I want to give it to you. If you want some free money, go to moneytreepodcast.com/free money to get your free money today. Follow the instructions and I'll send some to you. Enjoy your free money today. I'm not the Federal Reserve, so I only have a limited supply. This offer is good until I run out. Go to www.moneytreepodcast.com/free money to get your free money today.
Any thoughts, Doug, before we get into some of the quarter end numbers and how everything's going?
No, I was just going to say the thing about Apple, and I can't remember if I apologize if I'm repeating myself. By the way, the person I was thinking of was Nick Murray. That's the person that made that quote. And the thing that Apple has is Jobs was an innovator. I just saw something today that was great where somebody had written, you may have seen this, where they wrote Jobs asking for his signature, and he wrote him a letter back saying, I appreciate it. I'm humbled, but I don't do autographs. And of course, then he signs the letter, which is hysterical. It's total Steve Jobs, the brilliant thinker. The thing is that most companies, that all companies, right? You've got people who are visionaries, and then you've got the people who have to run the company. And Steve Jobs could never run Apple. He's just not capable of the level of detail needed to deal with bureaucracy and ombudsman and HR and blah, blah, blah. So what he does, they get someone like Tim Cook, and Tim Cook is a fantastic CIO or COO, right? Those people have built their entire careers as employees of these companies, doing a fantastic job looking down. And by the way, this is for anybody who's a business owner out there who's looking to get bigger and grow. This is really for you. Is those individuals like Tim Cook are amazing at looking down, and they look and they run the things. They know the details. They dot the I's, they cross the T's. The people that Steve Jobs are the ones that are they're the visionaries. They look out. What happens, unfortunately, is there's not really any visionaries below that visionary, because visionaries don't run companies well. And they're also become the trusted right-hand man or woman of that visionary. And so it becomes a natural transition that when it becomes time, like when Steve realized I'm moving on, right? And this is a concern I kind of have a little bit with Berkshire Hathaway, although Berkshire Hathaway is an analytical company to begin with. It's a little bit different. I'd have to look closer to the, who's taking, to the person that's taking over. But what happens is that they're trusted. So it's natural to say, look, when I'm done, I want you to take over for me. But and those people can become visionaries, but that's not their natural state, nor is that their history. Their history has always been look down, bottom line, crunch the numbers. And unless they can evolve to a visionary, it is almost, it is consistently the case, just like Apple the first time around, that the person that replaces the visionary will be a detriment to the long term of that company, unless they can learn to grow, to look out, because to look down constantly will no longer allow that company to be what it started as. So all the business owners out there that are looking at, transition in the future and where you might be going, if you've got that kind of a company, keep in mind that the person that you trust the most may be great at running the company, but can they take the company to the places that you saw and you wanted and that you believed? The chances are no, if you don't see that vision in them now.
Yeah, so Greg Abel's taken over, just for reference, at Berkshire Hathaway.
Berkshire.
And I think one of the interesting things, and I think this is something to keep in mind in general. I think Doug raised a good point. When Tim Cook took over, he was the COO or the integrator. His job was basically make things run. He's done a great job at keeping things running. But without innovation, it becomes like what came of IBM and many of the old big tech companies that have no longer grown, is they lose that innovation and other people take over for them. The thing with Warren Buffett, I personally think he should have stepped down like 25 years ago.
Yeah.
Warren made a big name for himself earlier in his career, and he's one of the best investors of our era. And I want to start with that because I don't want anybody to make the wrong opinion. Probably the best investor of our era, by far. However, a lot of that great investing came earlier in his career. The later investing in the last 25 years has actually been very subpar. Mm-hmm. And so I think you have to be able to tease out two concepts at the same time. Most people think in black or white binary terms. You're either for us or you're against us. You see all these extremists out there. It's either on one side or the other. If you're not with us, you're against us. You're the enemy. It's like, well, that's not how life works. Life works in the middle, right? In the shades of gray. And so Warren Buffett can be the best investor of all time and also done very poorly in the last 25 years. Both of those things could be true. Now, I would argue that he had a good reason for it, but I also think he made a lot of stupid mistakes. Mm-hmm. So he had a good reason for it. As he said, you give me $100 million and I will make 50% returns a year. But you give him like $100 billion, it's a lot harder to do. Totally agree. It's a lot harder to invest when you're big. So I totally understand and agree with that sentiment, but I also think that there are other things you could be doing with that. And he is not. And I think that's the takeaway, is that there's many things he could have done. He did great in 2008 because he had a lot of cash and people needed it. And he basically acted like a loan shark. And kudos on him, made some great returns on that. But outside of that period, he has not done well. He's invested in railroad companies. You think about what he's all about. He's all about capital efficient businesses. How capital efficient is a railroad? Not at all. It's the opposite. He invested in, was it Chevron? I think it was. And he invested in Occidental Petroleum. He's invested in a bunch of oil companies.
Occidental, yeah.
Yeah, I mean, I guess they've done okay, but they're not capital efficient businesses. So, yeah. He's changed what made him great. And then he invested in a bunch of, capital heavy businesses, which is the opposite of what made him great. So I think there were some big errors made on his part. I think Greg Abel's actually done a decent job. I would say Greg Abel is probably the reason why he invested in Apple to begin with. and they did a great job. He invested in Apple, and then they sold it in the last year, which I think was also the right move because Apple hasn't grown in 3 years, which people still don't care and keep boosting up the price, but it hasn't grown in 3 years. So they sold it, which I think was a smart move, right? Why would you own a company that's not growing when they should be? So I think all of those things come into play. Greg, I don't know how much Warren versus Greg are doing at the reins. My guess is that Greg's doing it and Warren's kind of signing off, but basically letting him do it, which is a smart move. But I think Warren probably should have sailed in the sunset a few decades ago and just remained on the chairman of the board to be involved, but not intimately involved. I think that's a lesson when you're investing in any company, that a lot of the old timers like to stick around. It's kind of like our politics, right? How many of those baby boomers are still in office that have been there forever? I mean, Nancy Pelosi's, she's worth 9 figures, and all she was a politician, and she's not alone. There's like tons of them in there that are really wealthy and they've been in office their whole life, and they just won't leave.
No, there's more about that today. I mean, a lot of what they're voting in the beautiful bill is going to now allow senior citizens not pay taxes. Whether you believe in that or not, it's another benefit for the baby boomers, and it continues to continue to have all of these opportunities.
They just suck the money out of the system. Baby boomers, I don't want to call them leeches because a lot of them listen to the show, but their generation have basically leached the economy from the 60s until now. And it's not done deliberately. I want to be clear. It's not done deliberately. It's not done, well, maybe the politicians, but everyone else is not done deliberately. But if you think about it, there were this big trend, right? There was a huge boom in babies, and that's what you call them baby boom, is that you had a huge amount of people in that generation that were much bigger than the rest. So everything, it was like the pig and the python, just kind of going through the snake, and it basically impacted everything. So it has caused growth, it's caused a lot of positive, but also on the way out there's negatives to society. It's like what's happening in Japan, is that you have more adult diapers than you have baby diapers. And that causes a problem demographically and economically. So I only point this out because you need to understand these trends, because that affects economics, it affects markets. So anyway, taking it back, what I want to say is basically that if you look at some of these companies, make sure you know who's in charge. Make sure the person in charge still has their wits about them. Just because they've been doing a great job for the last 20 years doesn't mean they'll do a great job in the next 20. It depends who's in charge. It depends on, like Steve Jobs loved Tim Cook with like a bunch of new products to bring out after he died. There was a bunch in the pipeline. He left them, so he had a long runway. But now, I don't know. I just see maybe next week I'll read this updated thing I read, which I thought was which kind of scared me a little bit about where technology is going. But I'll share it maybe next week because it was really interesting. Anyway, so I want to go through some of the returns that we've seen so far this quarter, because it's been a lively quarter. Let's see here. Share the screen. Okay, here we go. All right, so we're going to share a bunch of these, and we're going to go through them, and then we'll just kind of chat here as we move out. So this is last week. So we have basically year to date, the quarter, which is it's a little bit different, but if you look here, basically the S&P is up 5%. It's up 10 for the quarter. Micro caps not done well. Russell 2000 not done well. I kind of wanted to point these out because small caps have not been keeping up with large caps. Dow Jones basically large cap, although not always the best ones. I think right after they took out Exxon, it started to do well. So every time they take out a stock, it tends to do well. That's kind of a rule of thumb on Wall Street. If they're going to get rid of an index like an ETF, you should probably put your money there because that's usually the bottom of the market. Nasdaq's obviously done decent. If you look here at the sectors, what's been the best sectors? Industrials, communications have been the best year to date. Financials, utilities, technology's done reasonably well. Healthcare, energy, and real estate have not done well. If you look at size versus value. Large cap growth is clearly outperforming value and size. So small cap value is performing the worst. Large cap growth is doing the best. If you look at factors, we won't spend too much on this time. You can kind of look at the video on YouTube. High beta is doing well. Momentum, pure growth doing well. Things aren't doing well are high dividend and low vol. If you look at alternatives, some of these it's kind of hit or miss. Hedge funds have done well. I'm not sure I buy all that. All right, so look at industries. Nuclear energy up 30, almost 37%. It's done well. You look at social media, look at aerospace defense, gaming. Those have done great. Things haven't done well. Cannabis. Oh, there's something we talked about earlier. Cannabis down 41% this year. That's a cannabis ETF, by the way.
Sounds like a good entry point.
Yeah. It can only go up from there unless it goes lower.
Thought you're supposed to get high on cannabis, but not everything except the stock.
Boom, boom. Yeah, we need one of those in this show. Yeah, I mean, oil services not done well. Home builders, biotech. Here's airlines. Here's an interesting one. Biotech. So I'm curious. Biotech is totally in the gutter right now. I'm very curious when that starts to take off, because biotech is one of those areas that when it takes off, it really takes off, but is very much out of favor, and it's been out of favor for a while. So I've been watching it closely. I'm not putting money in it at the moment, but I'm watching it closely. I'm very interested in biotech. I've heard a lot of people start to talk about it, but it can keep going, and it's highly speculative. Want to be clear, it's like junior mining stocks. It is highly speculative, maybe worse than junior miners. Gold miners are up almost 50%. Almost missed that one. That's the best performer here. 49.6% for gold miners. That's done very well. Of course, gold has. So I think just looking at these different areas and seeing what's done well, what hasn't done well is really interesting. Fixed income, treasury bonds done the best. Looks like international treasury bonds, I guess, up 11.5%. Things haven't done well are zero coupons. Munis haven't done well. If you look at commodities, precious metals have done the best. There's no surprise there. Uranium, actually, if you can invest in uranium, really hard to invest in. Platinum, it actually has done really well recently. Copper, silver, gold, all the precious metals have done well. Things haven't done well. Corn, crude oil, wheat, soybeans. So things to keep in mind. Things are changing in the commodity sector. Global markets, things have done the best. South Korea, Israel's done pretty well, surprisingly, given what's going on. Spain, Germany, Italy. So Europe's done well. Europe in general. Brazil's a shocker, and China. Now, what do all those places have in common, Doug? You want to guess? All the ones that have done well. What do you think they have in common?
Oil.
Yeah, something even more powerful than oil.
Dictatorships?
I would argue that Europe has that.
That depends on the. Well, they're not here. They're not in the United States. That's what they have in common.
So that you're correct. They are not in the United States. Kudos to you for catching that.
International's been doing better. Was my point there. And then, it's been
Here's something they all have in common. They're all printing money.
Oh, so, yes, they're all doing QE. Good point.
All these countries are printing money, right? Why is China doing well? They're not doing that, right? Oh, they're printing money. Why is Europe doing well? They're printing money. Why? Oh, we gotta have 5% of our budget going into defense. Well, we gotta start spending that money. So
what does Trump want? Or he's going to fire Powell supposedly unconstitutionally?
Yeah, we'll see if that happens.
He wants to print money.
Yeah, well, I know he wants to print money, and I'm sure he won't fire Powell. I think that's just
no. I know. I'm just going with the news headlines. But the point is, he said today he wants interest rates down to 1%.
Trust the news, Doug. Trust the news.
That's right. I'm not saying it's happening.
Trust the science. Trust the news. Trust it all. Trust the government. It's all trustworthy.
Go get your tin hat there.
Hold on a second. I have it right here.
I'm going to start. Listen. I'm going to start
in the process.
Every single thing I post from now on from this, I'm getting off NBC and MSNBC from this point forth.
All right, I got to keep this on my head for 4th of July, Doug, because they might try to get those brainwaves.
That's true.
Although from what seen recently, it sounds like, you put your phone next to your head when you're sleeping. That's probably, maybe I should be wearing one of those. We'll get into that later. It was an interesting article I read. So anyway, but looking at this, obviously there's certain countries doing better than others, and they're the ones printing money. So I think you could argue we're up 5%, that when we start printing money, that we're going to start to show the same. And so I want everyone to just keep that in mind, because we're not really printing money right now, but we start lowering rates more. We start printing money after the big, beautiful bill, which is big and beautiful, that's for sure. And, I have to say that whole spat between Musk, because Elon's still spouting off about, how it's gonna crush the government. I was like, yeah, Elon, you saved us $160 billion. That's nowhere close to the 2 trillion you said. That doesn't matter. You didn't save us anything.
He saved the federal government about 50% of his own net worth.
Yeah,
wow.
I mean, it's like he shouldn't be spouting off. He didn't do his job either. So nope. I'm a little disappointed, Elon. I was hoping for more. I was hoping for more for Trump too. I mean, the fact that he was over there bombing Iran, whether you think it's a good idea or not, I didn't vote for war. I can tell you that much. And I think there's probably a lot of people who are a little bit ticked off right now at what Trump's doing. So that's neither here nor there, because I can't control it. But I want everybody to just know, so they don't think I'm biased. I'm completely unbiased. I like what I like, and if somebody doesn't do it, then it pisses me off. All right, so Swiss franc, euros, obviously doing well. Dollars, obviously not doing well, down 8%. So those are just some. I can go into some more, but what are some of your thoughts, Doug, as we kind of run through those numbers? I mean, there's a lot going on. We got crypto next. We got Magnificent 7. I mean, I can keep going through these. So.
Yeah, no, I think, like I said, I think the international's been doing better, and of course, then they started to do the QE. I think that's absolutely. There's the old saying, "Follow the money," right? And it seems inevitable now, as it always has been. When the M2 supply goes up, the markets tend to go up with it. And it's a lot because people spend, and that's where things get invested. And right now, we've been in a quantitative tightening, limited, but we have been more like a quantitative stagnation currently, because we haven't done anything recently. Where they're injecting capital. You made a mention about biotech, which is really interesting, and because and I don't have the name of the company, but there was a company that recently. I mean, again, it felt like the .com era all over again. This company, I think, has like 30 employees and just sold for like, $30 billion or whatever it is, just some crazy astronomical high evaluation number. And I've seen a handful of these this year in the biotech space. So even though the biotech space is certainly struggling maybe as a whole, there's definitely those signs of life that are coming to fruition through the M&A space that are showing you it's definitely a place in which there's been some strategic investment going on.
Yeah, we'll get into biotech later. It's not an area that I'm an expert in. I want to be really clear.
No, and you've never heard of these. You would have never heard of these companies. You're talking 30%, 30,000% growth for a company that literally was a penny stock on, that you wouldn't find in the deep annals of Twitter being promoted, and you never go there because you think it was fraud. So
right. So the thing about biotech, and I think this is the lesson I'm trying to convey. I'm not an expert in biotech, and I'm certainly not going to say like I am. I try to find the people that are, and here's what I've found over the years: is the experts in biotech are people who have like doctorates in that field. Multiple doctorate PhDs or MDs in that field. Normal everyday people just are not going to be that smart in that field. Because not only does it require a deep level of knowledge that most people on Wall Street don't have, but on top of that, you're also talking about a great degree of variability. So it's kind of like being an expert in, let's say, biology as an example, chemistry, biology, all the things. And on top of that, statistics, things that are also part of it, right? Because you don't know, science is not science is not really a science. I hate to say that, but if you think about the scientific method, it's all about hypotheses and testing them out and seeing if they're true. And most times they're not. You go back and you test them again and test them again. And you have to be very, rigorous and resilient, because it takes a lot of testing. So a lot of these biotech companies are like, oh, I got this thing and it's phase 1, phase 2, phase 3, and you're just like, what does that even mean? I don't know. So not only do I need to be an expert in the medical, in the medicine, the application to the body, I also have to understand the FDA and the company providing it and all the like. There's like 10 layers built into this. It's so complicated. It's not just like, hey, I came out with this new sports drink and let's see if it hits. It's like all these layers. And so you have to be really bright in multiple of those layers. And even then, it's a crapshoot, right? So if you look at venture capitalists, they'll invest in 10 companies. One of them is a grand slam home run. So it's like a 20 bagger. Like 3 or 4 are zeros. So you put money in, it goes to zero. And then 3 or 4 are like, neutral. And then whatever the remainder is in there is you probably got like 1 or 2 singles or doubles. And what they're really pegging on is that grand slam to accommodate everything else. And they might average 25% a year. But 70 to 90% of them are not going to pan out. That one is going to make it worthwhile. So if you think about biotech, it's the same thing, because they're just the reason that these companies like Pfizer and Merck don't do this sort of thing is because there's a ton of failures. So what do? They say, all right, well, you guys go fail, and when it passes phase 1, phase 2, phase 3, wherever they decide, say, all right, we see the application, we want to buy it, and then they'll acquire it. That's the cycle, right? Is they make this drug, they start selling it, and then this biotech company doesn't have the sales structure that a Pfizer or Merck have. So what do? They acquire it or they make a deal to sell it. And so the biotech does really well. Most biotechs don't become a Pfizer or Merck because they have their sales pipeline and sales cycles all built in. These biotechs, that takes a long time and it's hard work. So most of them just partner up. So it's a hard thing to invest in, which is why I don't do it. And I have to be clear, you don't have to invest in everything. Like people want to invest in cannabis. I was like, nah, I don't like it. That's okay. You don't have to invest in everything. You don't have to invest in Bitcoin and crypto. And here's an example. Here's what crypto's done this year, right? Year to date, Ethereum's down 27 and 3/4%. The quarter, it's up 32%.
Yeah, it's finally popped.
Yeah, it was down a lot, and then it just popped up a few weeks ago. Bitcoin's up 14% this quarter. It's up close to 30. Solana's down 23 for the year. So just because you like something doesn't mean it always goes up, right? I don't know everything about crypto, but I know enough to feel comfortable investing in it. I know what I need to know to have success in that area. I don't feel I have that in biotech. Now, would I invest in an ETF that has a bunch of biotech? Maybe. Yeah. I mean, if it's trending up, I would probably do that. Just like emerging markets. I'm not an expert in emerging markets, but if it's trending, they trend pretty strong. Frontier Markets ETF actually was submarined just before they started trending in the other direction, oddly enough. Here's a Magnificent Seven. Okay. Look at what's done well. Well, Meta's done well this year, 25%. Nvidia's up 17, Microsoft 17. Tesla's down almost 20. Apple's down almost 20. Amazon's a neutral, and Alphabet's down a little bit. So interesting. Magnificent Seven they've done well this quarter, except for Apple, probably because it's not growing, as we stated on the show. But you have to keep in mind, like, this is going to drive the market because they're big. Here's the top 10 winners: uranium, nuclear, Nvidia, platinum, Ethereum, Microsoft, semiconductors. These have all done well this quarter. What's not done well? Natural gas, cannabis, oil service, and Apple. Oh, look at that. Apple's in the top 10 losers for the quarter. So, keep in mind that just because it's Magnificent Seven doesn't mean it's always going to be great. I don't know why I've got multiple of these. Okay, here we go. Top winners for the quarter. Coinbase, 87%.
Hold on, Kirk. Let me get my magnifying glass.
Yeah, sorry. There's like 50 of them here, Doug. It's all right. You can worry about that later. Let's see. GE Vernova, terrible name, but that's up 71%. Western Digital's up 50. Just trying to think. Palantir's up 45. Oracle's up.
Larry Ellison just bought another island, obviously.
Yeah, I know. That's Should maybe put together some resorts while he's there. Let's see, Micron. I mean, there's a lot of good
Dollar
companies.
Tree. Now that's one it's a
Oh,
surprise. It's not a surprise, and the reason it's not a surprise is they typically do well when things are tightening and people need to budget. But I mean, Dollar Tree was on the verge of bankruptcy a couple months ago. I think they were like
there's Dollar
Dollar.
General.
No, it was Dollar Tree. It was the Dollar
Oh, Dollar
Tree.
Tree's here too. Yeah.
Dollar Tree merger with the one that's green. It's not coming to me, but yeah, it's been a disastrous merger, and here they are that finally rallied.
Yep. Yeah. There's a bunch of them here. I mean, Microsoft's in the list.
I mean, up 26%. Why not lay off 16,000 of your people or whatever it is?
Yeah. Uber's rounding out number 50. I mean, yeah. There's a lot of companies here. Here's some more.
Ralph Lauren. I saw Polo on the list. You know,
Palantir. Yeah, I mean, there's a bunch of names on the list. So, if you look at a lot of these companies, you'll probably find some names that and obviously we're not giving you the worst names, but I think this is the Dow. So United Health Group's down 40. Wow, I didn't realize it was down that much.
it's getting crushed. Absolutely.
Yeah, yeah, yeah.
It's got some things that have come out about possible Medicaid scandal, so it's not helping.
No, really, big companies are corrupt. Who would have thought? I thought they're all angels.
Right.
Just like big government, big nonprofits, pretty much any big enterprise has that built in. So anyway, but if you look at all these, there's a lot of names. Some have done well, some have not. But anyway, I just wanted to kind of round that out. We're not at the end of the quarter yet, but we're close enough where we could kind of make a pitch for, all right, here's the numbers. So I think the thing to keep in mind with this, actually, I think as of this taping, it is the end of the quarter. But something to keep in mind. Yeah, something to keep in mind is we had a slow period for the second half of June, and now July 1st going into August is usually a positive period for the markets. On top of the fact that you have Trump talking about the tariffs, making some positive movements with China. They've opened up the rare earths to us, and we've opened up. I forget what we opened up to them. We're opening up something to them. But point being is they're making progress with China. We have a long way to go, but we're making some trade progress. Hopefully, my guess is Trump will come out with something around July 4th as a tariff liberation day. I'm sure he wants to do something big and bold and beautiful. I know he wants to get the big beautiful bill done by then. We'll see if that happens.
I love big, bold, and beautiful. I get
it.
Yeah. Anything that's big, bold, and beautiful, I'm sold.
Yeah, it's good times. It's good times. So anyway, what do you want to talk about, Doug, as we kind of wrap it up? I think we got one more show actually before we're doing it tomorrow live.
I mean, I can, if we got some happy news, the stock market's rallying, I can temper that with some reality of a couple other areas. If you want me to just run through some stats here.
Yeah. Let's go through. We got a good 10 minutes, and then we'll do this again tomorrow, and we'll talk about AI again. So.
Oh, perfect. Well, I'm going to come back to this, but buy now, pay later plans. You're familiar with them, right, Kurt?
Yep.
the ones, when
not intimately familiar, Doug, but I've heard they exist.
Well, they were sold as basically no interest, no credit, no credit hit. Now 33% of people that use buy now, pay later are just bridging to the next paycheck. 25% are using it to buy groceries, up from 14% last year. 41% missed a buy now, pay later plan in the last 12 months. That's terrible because then all those interests just all hits you. There's 1.18 trillion in credit card debt and climbing. 29% of subprime borrowers get denied a credit card. The total consumer debt is now 18.2 trillion, up 4.4 trillion since 2020. But what's interesting about buy now, pay later is it was sold as a non-credit event. However, they're actually they're now prime BNPL users are being denied. And they are going to start reporting buy now, pay later on FICO. They're going to roll out a new model that includes buy now, pay later, which is 100 billion plus industry. I don't know the date that's coming out, but it's companies like Affirm, which already reports buy now, pay later, and PayPal are now going to start hitting that. We have actually seen, Affirm up 87% from lows. But I just want to get into some other kind of things here. Student loan delinquency rates have surged to 11.2% in 2025. That's up about 4% from where they were. And we're going to start seeing garnishments occur on those. Credit card delinquencies are now up to 7.8% in 2025. The highest is 2010. You now have 1.13 trillion in credit card debt, and average APRs are now 24%. I mean, that is predatory levels. I remember the days of the late night commercials where you could borrow for less interest than that. Mortgage delinquencies. This one to me is an important one to note because when you think about it, I've always thought the credit scores were kind of were unfortunately erroneously weighted, because the thing that really or at least mortgage lending, because people would look at credit, what happened here. The last thing that people are going to not pay on is mortgage, because you're not going to lose your home. You'll default credit cards. You'll let them take your car, but to take your home is a whole different story. 4.1% delinquencies now. 2.3 million households are behind on payments. There are regional disparities. They've seen foreclosure filings jump 34% year over year, impacting working class. Rental debt problems. 21% of renters are behind on payments. Eviction filings are up 78% in major cities, and it consumes 40% of median household income. As I said, wage garnishment is starting. 11% of working Americans are affected of wage garnishment, and an average takes 25% of disposable income. Elderly Social Security recipients are also growing debt pressure. 3.1 seniors have benefits garnished for unpaid debts, which is reducing them by an average of $140 a month. And medical debt is one of the biggest, 67% of those garnishments. Again, I can just keep going deeper. We've talked about this before. At the bottom level, we are starting to see incredible stressors, especially, and this is what's going to be really interesting about this big, beautiful bill, because, areas that were very heavy in red are seeing a lot of the challenges right now. So places like Mississippi, 31% of residents are carrying medical debt. Household debt to income ratios exceed 180%. Rural communities face 45% higher bankruptcy rates and less financial counseling. Alabama and West Virginia is close behind. Alabama, 28% of households are struggling with payday loan debt. West Virginia reports the highest per capita medical bankruptcies at 4.2 per thousand residents. Let's see, looking at subprime borrowers face 15.8% delinquency rates compared to 2.3 for prime borrowers. Low-income households earning under $35,000 showed 23% higher debt stress with limited access to counseling. The collections industry processed over $55 billion annually, targeting 77 million Americans with outstanding debts. Third-party collections handle 13.7% of all consumer debt. Average collection amounts are of $1,750 per debtor, creating constant financial stressors. There's some Pete Thiel just came out. And again, this is an opinion, but there was some studies that show that 70% of millennials, in whatever survey this was, I don't have the data, said that they are pro-socialist. He quoted basically, when one has too much student debt or if housing's too unaffordable, then one will have negative capital for a long time, right? Because they can't afford the capital. They can't afford the things that appreciate. Capitalism, having capital. And if one has no stake in the capitalist system, then you're going to start to see people turn against it. Now, a good note, we have seen a huge reduction in year-over-year inflation. If we take a look back at 2022, we were at 9% year-over-year inflation. It has eased from that peak. It is now down to 2.4%. It's actually, for those that love to point fingers, it actually kind of came back down during Biden administration, down to where we were about 3.5, and then kind of lowered down to about 2.5, went up right before January and has settled back down to about 2.4% as of April. So inflation is finally getting a little bit in control. But going back to the housing, KB Homes has reported, along with Lennar, that they're looking at a 30% decline in net income for the spring quarter. So understand that means that the new homes aren't selling, so they're building them. And I want to put this quote out there. I thought this was great, and just a positive thing, just kind of advice. I did not come across this book, but the quotes I came across a book that said, health is 80% eating, 20% exercise. Wealth is 80% habits, 20% math. Happiness is 80% purpose, 20% fun. Achieving is 80% listening, 20% speaking. Not good for podcasts. Talking is 80% listening.
What, Doug? I wasn't listening.
Speaking. Again, not good for podcasts. Improving is 80% persistence, 20% ideas. Learning is 80% understanding, 20% reading. Relationships, 80% giving and 20% receiving. So keep this in mind. Prioritize 80% and the rest will fall into place.
Right. Well, I think that's a great way to wrap up the show. Be reflective. We are going into July 4th weekend coming up. Today's Monday. This is taped live on Monday. It's usually on Friday, but it's taped live Monday, and then we're taping another one on Tuesday for next week. So just because the holiday weekend, we want to make sure we're not missing out. But hopefully everyone has a good 4th, and hopefully you can reflect on the importance of Independence Day and the importance of what it means to be in this country. I know we have a lot of extremists, and frankly, I think 99% of this country is not extremist, and you got the 1% who frankly, I think a lot of them are paid extremists, so they're getting paid to cause problems, which I guess that's kind of been a thing, and it's been going on for a long time. It's nothing new, but it's despicable, frankly, the fact that people with a lot of money in this country pay people to cause chaos in the streets. I mean, you have politicians who are claiming that people should commit violence, and you got rich folk that are paying people to go commit violence, and I just think it's despicable. I'm not sure what the laws are against that, but they're not strong enough, whatever they are. So hopefully everyone can reflect on the 4th and appreciate what this country means, good or bad, right? Because there's some great parts of this country, and there's some parts that aren't great, and I think you have to be able to appreciate both. And I've had this conversation with many clients in the last 6 months. A lot of them are like, I got to get out of here. Like, Trump's going to destroy the country and he's going to round us up and all this. And, whatever you believe, I get it. Every time there's a new president, we have a round of people who think that the country's going to end and they want to leave. So, Obama was the best gun salesman ever. When he got elected, the gun companies did extremely well because everyone was afraid he was going to take the guns. Who went and bought some. So this has been going on since the dawn of this country, and but I think we can all appreciate the fact that, for better or worse, it's hard to find a country that's better. Right? It really is. Like, if I had to leave this country, I'm not sure where I'd go. I wouldn't go to Canada. They showed during COVID they did a really bad job of freedom. I thought Australia was on the list. They've done a bad job. New Zealand done a bad job. Like, there aren't many countries out there that'd be better than the U.S. So. I think the grass is always greener, right? It's always greener in some other country, but I think we can all appreciate what we have here. And Doug, where can people find more about you?
Well, I'm going to say this. Go to any developed country, even like England, and go 5 minutes outside the city and realize how great our infrastructure is here across the country. I mean, you need gas stations, you're going to find them. You need groceries, you're going to find them. This country is... there's developed countries, and then there's the U.S., and people don't get it unless you've actually been out there. I'm Douglas Hagren. I'm the founder of Emergent College Advisors. Here's what I've found that most successful families miss is that retirement income distribution is a completely different game than accumulation. And college is one of those first big tests. You have spent years growing wealth, but drawing it down efficiently, tax smart, in the right sequence is a different skill set entirely. And when college enters the picture, that drawdown can become dangerous. Too many families pull from wrong buckets, after-tax cash, retirement accounts, or investments meant to last decades just to pay tuition bills from the hip. That's not a strategy. That's surrender. Emergent, we help high-income families coordinate college funding with retirement income strategy, optimize tax location, preserve compounding, and we turn expenses into opportunities. Because when you're entering distribution mode, every dollar you have has a job. And if college costs aren't planned in that framework, you risk unraveling the entire plan. So if you've built something worth protecting and you want to fund education without blowing up your retirement, visit mergentadvisors.com. That's MERGENT, mergentadvisors.com, and mergentcollegeadvisors.com, because smart money doesn't guess, it plans. And that takes an expert.
Yeah. Well, thanks for coming on, Doug, sharing your wisdom with us. And hopefully everyone has a happy 4th of July, happy Independence Day. And we will see you all in the following week.
That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.